Hey everyone, it's Larry East with Megastar Financial. Wanted to talk a little bit more about rates. Last week we spoke about the supply and demand side of rates and rates increasing due to that. This week I want to shift gears a little bit and look at inflation. Inflation is another big factor in rates, and the basis behind this is that inflation basically money loses value over time, and that's due to inflation. So a dollar in 1950 had more buying power than a dollar today, and just like a dollar today has more buying power than it will in 2030. So that's kind of the concept of inflation, and it's very important in bonds and mortgage-backed securities, which are bonds and which are our rates. And the reason being is a mortgage investor, for instance, has a fixed rate of return for a 30-year period on a 30-year mortgage. So if they're getting a 4% return today, they're very sensitive to increases in inflation, because over time that fixed 4% rate of return is going to be worth less, or their profit's going to be less, rate of return is going to be less over time. So they're very sensitive to increases in inflation, and any sign of inflation increasing, the investors are going to demand a higher rate to compensate for that. Thus, rates go up to meet that demand. So that's the basis behind rates and inflation. And last week, we got a couple good looks at inflation that I wanted to talk about. So we got CPI, which is Consumer Price Index. So this measures inflation at the consumer level in the economy. And it looks at month-to-month changes and year-over-year changes. So the year-over-year change was stable, basically in line with what was expected. The month-over-month figure, meaning from December to January, had a pretty good increase, more than expected. That spooked investors a little bit, and unfortunately rates reacted to that. So that's something we definitely want to look at. Also, we got PPI, which is Producer Price Index. So this is inflation at the producer level, factory level type of thing. Again, that had another month-to-month jump from December to January. And investors aren't as worried about PPI because they know the producers can absorb some of that inflation. But over time, that's going to work into our pricing and be reflected in an increase in CPI, or the Consumer Price Index. So these reports come out monthly, and it's something I'm always looking at. So we'll kind of watch this jump over time and see if it was something that was a temporary blip or something that is really indicating some future jumps in inflation. So wanted to shed a little bit of light on inflation. I hope it was informative and helpful. And if you have any questions or need anything, I'm here to help. Thanks, guys. Take care.